Welcome to Talk Tickers. We're here to dive deep into the latest earnings calls, pulling out the key insights for you.
Yep.
Today, it's all about the most recent financial report. We'll break down the numbers, the strategy, basically give you the essential takeaways.
Okay, so looking at it from, a high level, the quarter actually looks pretty solid financially.
Solid. How so?
Well, service revenues saw some growth. EBITDA was also up, showing positive movement. And free cash flow generation looks strong too.
Okay.
But it wasn't like completely rosy across the board. Some business areas had, let's say, mixed performance.
Right.
And there was that specific VAT case in Norway, which had a bit of a negative impact. Minor, but noticeable.
Okay, let's unpack those headline financials then. Group service revenues. What were they?
They hit 16.1 billion Norwegian kroner. That's up 2.1% compared to last year.
Okay, 2.1% year on year. And EBITDA, that's a good measure of operational profit, right?
Exactly. That came in at 8.6 billion NOK, which is up 2% year on year. And it seems Nordics really drove a lot of that.
The Nordics again. Makes sense. What about earnings per share?
Adjusted EPS, yeah. That was 1.96 NOK. That's a 4% increase from the previous year.
4%, okay.
But it's worth pointing out, like I mentioned, that VAT case in Norway sort of dampened things a bit.
Ah, right.
And also some challenges they faced in one of their Asian markets.
Okay. Cash flow. You said that was strong.
Yeah, free cash flow before M&A activities was pretty robust, 3 billion NOK.
3 billion. Nice.
And the capex to sales ratio was 12.8%.
12.8%. That sounds a bit lower than usual, doesn't it?
It is, yeah. Lower than previous quarters. Seems like they're taking maybe a more measured approach, especially in Asia.
Okay, prudence in Asia.
Yeah.
And how's the balance sheet looking? Leverage?
Getting stronger, actually. The leverage ratio improved down to 2.2 times.
Good sign.
Definitely. And return on capital employed was 8%. Now, if you remember, the previous quarter had that big one-off positive.
The reversal thing.
That's the one. So if you strip out associated companies, the return on their core operations, it's actually more like 12%.
12%. Okay, that puts the 8% in context. So let's drill down into the Nordics then. You said they were the main drivers.
They really were. Service revenue growth there was 2.3%.
Okay.
But get this, if you take out that Norwegian VAT impact, the growth would have been 3.1%. So quite a bit higher.
Wow. Okay. And mobile specifically?
Mobile service revenue up 3.9%. Pretty healthy.
And costs? Are they managing those well in the Nordics?
Seems like it. OPEX, their operating expenses, actually declined by 1%. They put that down to their transformation efforts, efficiency drives.
Right, those ongoing programs.
So you combine that solid revenue growth with lower costs. EBIT growth was 5.8%.
Nice.
Or, again, excluded the VAT, 7.5%.
Very strong. And ARPU? Average revenue per user.
Also strong on mobile.
Wow.
Up 5% in both Norway and Denmark. And even fixed ARPU showed better growth in Norway.
So mostly positive in the Nordics, but wasn't there something about subscriber numbers?
Ah, yeah, good point. It wasn't all perfect. They did see subscriber numbers dip in Norway and Finland.
Any reason given?
A few things, apparently.
Yeah.
Changes in sort of legacy contracts, tougher competition.
Always a factor.
And the ongoing fiber rollouts, shaking things up. Plus, they mentioned higher sales and marketing costs.
Okay, so investing to compete, but losing some subs in the process. Now let's shift gears to Asia. You said that was more varied.
Yeah, definitely a mixed bag over there. Overall service revenue growth was just 1%.
Tell me 1%.
But there was some encouraging news. One market, they said, improved from being negative growth to, well, less negative. So moving in the right direction.
Progress, okay.
And two other markets actually did really well. Strong performance, significant EBIT growth.
But then there were the challenges.
Right. Another market faced tricky macro conditions and uncertainty around tariffs.
Macro headwinds, yeah.
And yet another market is still dealing with really tough competition, which is hitting their performance.
And that divestment, the one they've been planning.
That's taking longer than they thought. Still expecting it, but now pushed to the second half of 2025.
Right. Delays happen. Any other bright spots in Asia?
Well, one market showed solid revenue and EBITDA growth, even with some local unrest going on. So resilient there.
Okay, so it really highlights how different those Asian markets are, doesn't it?
Absolutely. And it underlines how much the overall group result is leaning on that strong Nordic performance right now.
So looking forward, what are the big opportunities? Where's the strategic focus?
Well, one area they highlighted is this growing demand for secure local data storage. Makes sense with everything going on.
Yeah, data sovereignty is a big theme.
Exactly. And they're acting on it. They've launched what they call a sovereign and secure AI platform in Norway, actually.
Oh, interesting. AI too.
Yeah. And they've already got some initial customers signed up, plans to expand it further.
Okay. Anything else stand out?
Definitely. This breakthrough contract they mentioned, ultra-secure tactical defense communication.
Defense? With who?
Finnish and Swedish defense forces?
Yeah.
That feels like a potentially big deal, right? Tapping into a high-value specialized market.
Wow. Yeah. That's significant. Moving into defense comms.
And it ties into their wider focus. They talked about scaling up mission-critical services, particularly for the defense segment.
So it sounds like their strategy is what? Solidify the core, but also push into these new high-growth areas.
That seems to be it. Profitable growth in the core telecom business, but also actively exploring these mission-critical sectors, defense, maybe other adjacent areas too.
Smart. Diversification.
And they stressed being customer-focused,
Yeah.
leveraging their workforce's skills.
Mm-hmm.
You know, the usual execution is key stuff.
Right. And M&A. Still on the table.
Oh, yeah. They're actively looking, both in the Nordics, they mentioned Denmark and Sweden specifically, and also in Asia.
Consolidation potential.
Seems like it. They sounded somewhat positive about the regulatory environment for in-market deals, particularly in the Nordics.
That could shake things up if something happens there. Worth keeping an eye on.
Definitely. Any positive signals on the regulatory front for consolidation are, pretty significant.
Okay, let's talk outlook then. What did they say about the rest of the year? Did they stick to their guidance?
Yes, they reaffirmed the full-year financial outlook, so no major changes there, which gives some confidence.
Good to know. Any specifics on spending or cash flow timings?
A couple of things. In the Nordics, the capex to sales ratio is expected to be more back-end loaded, so more spending later in the year.
Okay.
And we should expect that VAT provision payment, the one we talked about, to hit in Q2 in the Nordics.
Got it. Q2 for the VAT payment. What about Asia cash flow? You said Q1 was strong.
It was. But they flagged a dividend outflow coming in Q2 related to one of their investments there.
Ah, okay. So cash going out.
Partially offset, though. They expect a reduction in withholding tax, which helps. And then looking further out, they expect dividends coming in from another Asian investment, but not until the second half of 2025.
Okay, so some moving parts on the cash flow timing.
Yeah, but importantly, they reiterated their commitment to hitting the overall free cash flow guidance for the full year.
Right. Sticking to the target. That's key.
Gives you a decent picture of the expected ins and outs for the rest of the year.
And just quickly on costs, you mentioned OPEX down in the Nordics due to transformation.
Yeah, those efforts seem to be paying off. And they also pointed to a consistent reduction in their headcount, their full-time employees, over time. So ongoing efficiency focus.
Makes sense.
There was also a mention of some costs being reallocated between HQ and the business areas, which kind of affects the other cost line item, but that's more of an internal accounting thing.
Okay. So wrapping up the results, what's the big picture takeaway for someone watching this company, for an investor?
Well, I think these results really show, the resilience you often see in the telecom sector, even with all the macro uncertainty and geopolitical stuff happening.
Telecoms are pretty defensive generally.
Exactly. And the strong Nordic performance is clearly the bedrock right now that's really carrying things.
Well, Asia is, needs watching.
Right. Progress in some parts, which is good to see, but definite challenges in others that need ongoing work.
And strategically, that shift towards secure infrastructure, mission-critical services, that feels timely, doesn't it?
Absolutely. And aligns really well with current market needs, national security concerns, enterprise demands. It's a smart pivot.
And that potential for consolidation in the Nordics, that remains a wild card that could really change the game there.
For sure. Big implications if those deals start happening.
Okay, brings us to our favorite part, the "This is not financial advice" segment. Time to get a little creative based on what we've just heard. What's your outrageous but plausible trade idea this time?
Right. Okay. So think about that Nordic strength, right? And especially that new defense contract in Finland and Sweden.
Yeah, the ultra-secure comms one.
Exactly. So here's the idea. How about looking beyond the big player here and considering, say, a long position in a smaller, maybe lesser known cybersecurity firm, one based in Finland or Sweden that specifically focuses on secure communications for government or military clients?
Ooh, okay. A niche play. Why?
Well, the rationale is this big contract could be the tip of the iceberg. It might signal increased focus, increased spending in that whole secure Nordic comms space driven by geopolitics. This smaller firm could benefit from that tide, maybe even become an acquisition target down the line.
Or just see strong growth as that specific niche heats up.
Precisely. It's a way to play that specific theme, the intersection of Nordic, tech, security, defense, but maybe with a bit more focused exposure than just the main telecom player. Highly speculative, of course.
Of course. Outrageous but plausible. I like it.
Yeah.
A focused bet on a potential sector ripple effect. Okay, remember everyone, that was purely a speculative thought experiment, definitely not financial advice.
Definitely not.
So that wraps up our deep dive into this earnings call. What stood out most to you listening in? Any questions that sparked? We always encourage you to go deeper, do your own research.
Absolutely.
Thanks for tuning in to Talk Tickers.